All right, thank you for tuning in, and hopefully you are watching the video today to learn about a simple strategy. It's one that I use on the daily, and I talk about it here on the channel quite often. And when I say quite often, I mean a lot. And the reason why I go over the strategy, using examples off of the charts and examples from areas in which I have traded myself and posted over in the Discord community or shared with the community. And if you're interested in joining our Discord community, you can find the link down in the description portion of the video. It is free to join, but we do have a channel there titled the Trading Floor, and that's where community members come together and we share trade entries. I trade supply and demand. Not sure 100% that everybody trades supply and demand, but we do have successful traders that have mirrored or watched or educated themselves through the means of watching the videos here on the channel. So I simply would tell you to take a pen and pad, watch this video here, because I'm going to go over just a few examples, but I really want to talk about the strategy in detail and how it works, because people have found success using it and profitable and consistent today. So maybe you're someone that's interested, you're trying to find or looking for a solid strategy to use. Now, I will tell you to back test the strategy for yourself, because I'm not trying to push anybody in any particular direction. This is just how I trade personally, and I'm just sharing the way I do so with, opening to the public. That's why I have so many videos here on the channel, because I want to see people succeed. All right, so first example I want to go over, and again, this is supply and demand at its best. I'm gonna say this right now: if you have a strategy that works for you and you're consistently making money, please, this video is not for you, because you should. If I was you, I wouldn't even watch it, for one, because the fact is, if you're already making money and you're consistently doing it each and every day, then stick with that, because I always stress that in the videos. You have something that's working for you, please continue doing so. The old saying is, why fix something that's not broke? If it's not and it's making you money again, stick with it. All right, so simply supply and demand is just all about aggressive buying and selling. That's what we're looking for. Areas where the market is either trending to the upside and breaking structure, or trending to the downside and breaking structure. So we always want to follow in the direction of overall how the market is doing. All right, so that's why I stress, use a higher base or higher time frame chart. I trade the 60 range and a 12 range for entry. So I like to use two charts in confluence of one another, or together, to be able to get me into a solid trade. One, to mark my higher base zone. The second one, which is my 12 range entry chart, to get me into more of a precise entry point, to where I'm not taking on much drawdown. Okay, I'm trying to eliminate, first and foremost, getting stopped out. Secondly, you want to eliminate as much drawdown as possible, so that you don't, if you're new to trading, maybe you're going to jump out of a trade and get scared, and then you get stopped because maybe you have your stop loss too close, and then the market goes in your intended direction. Trust me, people get frustrated with that simple concept all the time, or idea. They get stopped out. They have to stop too close. Okay, so we're just going to talk about stops as well, and targets or profit target areas as well, as I go through the couple examples here. But anyways, number one, the first example. This is from the 21st. First and foremost, what you got to do is understand and grasp market structure. Now, that's number one. It is the most imperative and important part to trading, okay? Because what that allows you to do is to pick the overall direction of the market, and to also to pick which way you should be trading. So as you can see here, the market has been breaking structure to the upside. So if the market's breaking structure to the upside and trending to the upside, then all you should be doing is looking for pullbacks of key areas of aggressive buying. That's demand, okay? So as the market is making higher highs and higher lows to the upside, we got a pullback here. We got a break here to the upside. This would be a solid area of demand if it came back here to the tick and rejected. But look what it did. It pushed up, pulled back, and then we get another break of structure to the upside here. So this little box right here, this is a higher base zone off of a higher base chart, my 60 range. Now, the goal is to look for a area of rejection to get into the trade here and take it back up to the tops, possibly up here at 697 and up there to 700, possibly. There's a round number approaching or above us there. But first and foremost, let's identify the zone. This is an aggressive area buying where we got to break a structure. That is the imperative part to my supply and demand, or how I trade specifically. I want to see a break of structure. I want to see a demand zone being created where there is aggressive buying. All right, and then back at the zone, I want to see, right here where these candles broke to the upside and created a demand area here. They didn't As it, the first candle pushed up, it didn't immediately come back. So we have an area there where there's a gap. Okay. All right. So that makes the area or zone high probability to me because it's untested. I like to take trades more so from areas which have been not tested. Okay, they tend to work out better. So when the market pulls back to the zone right here, all I do is I'm waiting patiently. I mark the zone off my higher base chart. It comes back to the zone, move down to the 12 range chart, which we're going to do right now. So I scroll down. This bigger box right here, you see, that's that higher time frame or higher base zone. Yeah, it looks big, but we're scaling down from a higher base chart. That was a 60 range. Now we're all the way down to a 12 range chart. So once we get down to the 12 range, we want to see or do the same thing. Look for a creation of a break structure where we have a demand zone. Okay, so we're back down here. This is that zone. Once we tap into it, I'm just looking for where the market is going to break higher and create a demand area. So if you see right here what took place when it got down here, it broke up. Okay, so when it broke up and took out these levels here or broke through some area structure right here, that the first break is basically telling me that they still have interest to go higher, but it doesn't solidify everything because still I want to be able to mark a zone, meaning a demand zone off of my lower base chart. So we broke up here, clear this area here. Okay, that didn't immediately come back. You probably could have taken this trade right here if you saw this push up, pull back, and break above, come back to this area of demand resting right here. If you got into that trade, you saw where it went up some, but it did pull back before going back up, right? So that's how the market moves. And the reason why it came back to this area here is because this was an untested area of demand. And you have to understand when you get down to a lower time frame chart, they may want to pull back to those areas and test them before they continue making their move to the upside. So if you got into the trade on the pullback to this small little area of demand right here, just one thing I always like to say is pay close attention. I like to take a trade if this was a demand zone right here, this little small area right here, it pulls back to it. I like to see where the market pulls right back, when it pulls back to it, that it wicks away or moves away from it pretty quick. It did that when it pulled back right here. As you can see, what did it do? If this was a demand zone, let's just move this box down a little bit right here. Okay, if this was a demand zone, which it is right here, small little area of demand, look what took place here when the market broke above it. See that candle that closed on the inside? That's what I don't like to see, is where the candles close into the zone themselves. I like to see where the market, and I'm going to show you the example right now. So let's go ahead and delete that one there. Where the market pulls back to a beautiful demand zone that has not been tested. Bring this down. Has not been tested. There's a small little area of gap right there. All right, small little area right there, and that's what I like to see back at a demand zone. In this case here, area of aggressive buying, pulls back, small area of demand right there. But did it close back into the zone? Let's bring this back up. No, it did not. It basically came right to the zone there. It tested it maybe within a tick, okay, and then it bounced off of it, rejected it, and moved in the opposite direction back to the upside, okay? And that's what we want to see. We want to see the quick rejection where the market taps its own and then breaks back in the same directions, because the higher time frame showed us we have a demand area, all right? And we want to see on a lower time frame where it pulls back to an untested zone and then breaks it back to the upside. So when it does that and it quickly moves away from it, all I'm waiting for is the break and close of a candle above the last down bearish candle. This being the last down bearish candle, get the break and close above it at 64. Then we're going to, basically what you want to do is gauge where to go next. Take it back up to the high here at least, okay? You can take out maybe right here at 686 if you want to, or back up to the high here at 696. Either way, it's a solid area to where if you got into the trade here at 64 and took it back up to at least up here to 87, then you picked yourself up a little more than 20 points on one trade on the NASDAQ, okay? If you trade on one contract, that's pretty good. You're scalping to make money, and a 20-point run on the NASDAQ on this small little area off this demand zone, off the higher base chart, is a good opportunity. Now, if you're trading multiple contracts, then, like I do, I trade at least 2. Sometimes I may trade up to 4 depending. And, to me, I'm not all into the game of just trading like 10 contracts right on out, or 20 contracts in time, maybe if you choose to do so. But I believe in scaling and growing an account, slowly versus just trying to get a quick reaction or a quick instant gratification. That's, to me, when you start doing that, imagine going in with 10 contracts and the market comes back against you, then you taking more drawdown or you taking more of a loss than you wanted to, right? So The reason why I like to trade smaller contracts is because for one, I can protect and preserve my capital more so by doing so. And don't have to worry about, if I take a loss, then I ain't take a major hit. I can still play the game, right? I can still stay in the business of doing what I like to do in trading. But it's all up to you and how you want to trade. But this is just me. I don't particularly like to trade more than 4 contracts, whatever the case is. But a 20-point run on 2 contracts, you do 2 of those a day or even 1 of those, and it's pretty decent, okay? It's a pretty decent day. How should I say, income for the day. Let's just leave it like that. Let's move on to another example. So you're probably saying, hey, Mike, show me an example of a supply setup. Okay, well, let's take a look at a beautiful supply setup and what you can capitalize on. All right, first, we want to identify the structure. All right, we got a nice trend to the downside where the market is breaking structure lower, correct? So we want to be looking for opportunities to do what? Excuse me, guys. Let me go back because, let's see. Okay, so we're running to the downside, breaking structure, right? Okay, you can see it continuously doing so, pulling back, breaking structure, pulling back. Breaking structure to the downside, okay? So we want to mark an area of demand. But first and foremost, we're back on the 60 range higher base chart, all right? Again, I want to mark my zones off of a higher base chart. So when I do so, I find a beautiful area of supply resting right here where we have this break below this area here at 18,028 and a half. Runs down, breaks below it, pull back. Beautiful area of supply, aggressive selling right there, and an untested zone right there. Again, remember, untested areas where there's a gap back at the zone, meaning where it's this will be the first time it taps that area, makes it a high probability zone. Once we get the pull back to that area, what I like to see typically being is where the market taps it and pulls, quickly moves away from it in a sense. Now you can see this bullish candle here, it did slightly close into it, and then we get this next bearish candle here that starts to form. And I don't know at this point, it probably was looking to the upside and then came back with the wick pushing lower, but it was still a rejection. It didn't close deep into it, the zone, meaning probably the halfway mark. So something like this right here, let's just show you an example, meaning that it didn't come maybe like halfway through the zone right here and close into it. All right, so if it does something like that, then I'm starting to really raise alert to say, hey, this may not turn out to be a good setup, because maybe they want to kind of push higher at this point, but you just have to wait and see. But anyways, it does test the zone. It's untested, high probability zone. So now let's move down to the lower time frame, and we're going to mark off and find our 12 range, our entry chart demand zone. Supply zone. We're talking about supply going short. All right, so let's go down to the 12 range. All right, this zone right here, this is that area I talked about. I marked it up off of the higher base chart. This is it. This is it right here. Now, the market retraces back to that area. All right, as you see here, that low here was at 22. Look here, 22 right here. Well, let me see here. 22 right here. 22 and pulls back up to 67 area. All right, 67, 68 area right here. Okay, so let's take a look here. It taps the area. I'm going to talk about this line here, this arrow in this box here. This box is where the supply area was created when it rejected and pulled away or started to move back down to the downside. We push down, pull back, got an aggressive area selling right here, small area selling, pulls back. It doesn't 100% tap into the demand zone at this point here. So what it does is it's within 2 or 3 ticks. Sometimes I'll take that trade setup, even if I have, it went all the way back down to 35 and you still picked up. Let's say you got into the trade here. I don't know. Let's say you got into the trade at 59 or maybe 58 or whatever the case is. And it runs all the way back down here to 35. You pick yourself up. What was that? 20 points. No, that's 23 points. Something like that. 22, 23 points. A profit right there. Again, but what I like to do really is wait for it to come back to the actual supply area here on the lower base chart, one that I have marked right here. Now, if you see what happens here, it does come to an area of supply resting right here, which is another swing right below it. So it broke structure again, right down to the downside right here. But the market likes to play games. If you got into a trade right here, they know people are going to take, look for opportunity because this is a area of supply resting right here to go short. If you get into a trade like right here, then you're going to become liquidity. They're going to stop you out. You have to know that if this is an opportunity, an area of supply right here, right? And this is one right here. You got to think about it. Should I take my trade right here, okay? Or possibly even right here? or wait till it gets back up to the top of the area where the selling started off. I always talk about the origination of where the selling started or buying started out. Try to wait for the market to get back and retrace to that area. So if you got into your trade right here at this supply area, and then the market breaks down, maybe you got in here around 56, okay? Maybe you picked up a few points there before it came back, and it possibly could have stopped you out depending on where you have your stop at, right? Because more than likely you're going to have your stop resting at the back end of the support and swing around 63, okay? And they stop you out maybe by a point and a half before they run the market down, back down in your intended direction. That's why I talk about giving your area wherever you have your stop loss at some room to breathe, a few points, okay? Don't put it tick to tick unless you're going to be that very, very conservative and you really, worried about maybe losing money. Then you have to think about it, because you got to understand the market does that for a reason. They will test people's stops. They know where they're at, and then they'll keep it going in your direction, because once they grab liquidity, they're going in the opposite direction. So putting it back and taking the trade where the selling started at, this was the first supply zone, second one, third one. I'd rather wait till it retraces all the way back to the first supply zone, because I'm safe. I'm more safer because, it doesn't really have anywhere. It's already started to reject off the higher base chart. It's a higher base supply zone, like I said, right here. So if they're rejecting this area, you got to think that this point here and where they started moving to the downside, they're going to test all these areas to kind of grab liquidity, and they're going to run it back up here to the original area before they start making that move back down to the downside. So look what happened. It comes back, it fills the zone right here all the way in, okay? So if you drew this box out, okay, right here, they close within the area supply off the lower base chart, but they didn't close deep into it. They kind of just within a point or two, and then it starts to move to the downside. Look what it did. It flushed to the downside. So this was the best setup to take. Higher base chart supply area, lower base chart supply area. Two confirmed zones. You look for the opportunity to take your trade. The arrow right there, I would place my stop. Give yourself a few points room. I don't know. It depends on the person. I'm not going to tell anyone how much they should be willing to risk. But, 2, 3, 4 points maybe. Just kind of give yourself some room just in case. But because we're waiting for the prime opportunity to take a trade at the uppermost portion of this leg where the supply area the first supply area was resting at, where the original selling took place, that's a better opportunity to take the trade. If you notice, if you got into the trade when it taps in here and then it breaks below here at 59, look, what does it do? It runs all the way down and it runs the area at the low at 22. So you would have gotten to that trade there, you'd have picked up a lot of points there to the downside off just, again, using this strategy, which I'm talking about. You can back test it and see. One of two examples I wanted to do. One talking about a beautiful demand setup, and then the other one talking about a beautiful supply setup. So back test it yourself. I just wanted to show people this because it's a great opportunity and a strategy to use if you're looking for something, especially if you're a beginner trader. But this is how I cracked the code for myself and started off trading. And once I figured out how to read the market the correct way, I will say that. But then I was able to devise a strategy that worked for my means and has allowed me to be consistently profitable in my own day trading. So I wanted to share this with you. And this is the reason why I make these type videos, so that I want to see people become inspired, for one, but two, become profitable. But anyways, if you're a first-time viewer, please take the time to go ahead and sub to the channel. If you're a beginner trader, hopefully this helps you out. But take the time to go ahead and sub. Click on the sub button. Make sure to also turn on all your post notifications if you have not already done so you never miss one of the uploads here in the channel. If you want to join the Discord, again, the link is down in the description portion of the video. Click on it. It's free. Right below that, you'll see a link that says Become a Elite Member. Now, because people always ask me this, how can I become an elite member? What you receive with the elite membership is the trade breakdowns. Those are videos to where I go through in detail about trades that I take, so you can understand prior to me taking a trade, what was my thought process? Why did I take that trade? Where am I looking to take that trade to? Where did I place my stop loss? Those type videos help people out. So I made those private to a community of individuals that are seeking for further information, in the sense of and becoming an elite member just basically means you're supporting my efforts as a content creator here on the YouTube platform. So this is my way of rewarding and giving back perks to you guys for believing in me and taking value in the information that I'm sharing here. But again, all it is $6.99 a month. $6.99 a month, not a week, not a day. And you get the trade breakdowns, the video playlist, which is a link by link series of videos that I pulled away and kind of put into a list of videos. They're videos that I believe cover the core to how I trade, the strategy, and surrounding other important topics. So if you're interested in becoming an elite member, click on that link right below the one that says Discord in the description portion of the video. Make sure, because there's going to be 2 tiers that pop up when you click that link, make sure to choose the one that says elite membership, or no, I'm sorry, it says elite support. How does it say? Elite channel supporter, okay, or it may say elite channel member, one or the other. It's the one that has a $6.99 price tag to it, okay. But yeah, again, if you want to join that, you'll see the link down in the description, or you can click on the join button. Click on the join button right here on the video, and you'll see those 2 links pop up, or not 2 links, but those 2 tiers pop up, and join the one that says elite channel supporter. But outside of that, that's all I have today. If you have found value in today's content, please make sure to drop a like on the video. I'll see everyone in the next one, and have a wonderful weekend.